Okay, hello everybody and welcome to this IC Markets webinar, live webinar. My name is Chris Wilson. I am from Trade with Precision and I welcome you on board all here today or tonight for some of you I expect. Please do excuse my croaky morning voice. It is 7 a.m. here. Hopefully that sorts itself out in time. But I will press on. So yes, if any of you have been on these webinars before, you'll know what I'm about to ask. If you could just type into the question box that you can hear me. Excuse my cough as well. And just verify for me that the sound is okay and that I'm not sitting here talking to myself, which would be highly embarrassing. There's quite a few on of you. Awesome. Thank you, Nicholas. All green, loud and clear. Godwin, thank you very much. Okay, Bjorn, all coming through now. Awesome, thank you everyone. Yeah, there's a few of you on here, but not too many. So that I think gives us an opportunity to make this as interactive as we can. There's not really any structure to this webinar. It's just basically an agenda page and then me talking about live markets. It's essentially just a market scan. Let's just do a really good market scan. Now, this is around about the time that I would normally do a daily scan anyway, so that's pretty convenient. When I say a daily scan, that is, for me, 8 o'clock in the morning is when the daily candles tick over, the new daily candles tick over. So that means you can expect in the next hour a new daily candle, a new 8-hour candle, a new 4-hour, 2-hour, 1 hour, and 15, right down the line. New candles on pretty much every chart, daily and below. So it's a really good time to trade. I like to trade, you know, the start of the daily candle. I also like to trade the start of the 8-hour, the 4-hour, the 2-hour. Anything below that, I don't, you know, if I don't make it, I don't beat myself up because I can't be glued to the charts all day. But that's generally my process for trading. So we'll just carry on and do a typical daily scan, and we'll see what we see. Awesome. Okay, I'll keep the question box handy. And okay, before we go any further, I just need to flash this disclaimer up for you. Just have a quick scan of this, make sure that you're all good to proceed. Just remember there are risks involved in trading like any leveraged product. Good on the way up, but not so good on the way down. So you've got to make sure that you have risk management in place and be really aware of what the risks are. Okay. And just really quickly, what we're going to be talking about in today's webinar, recent price movements in the Forex markets. I normally start to speak properly within the first few hours of the day, so apologies for that. Recent price movements in the Forex market. So we'll have a look across a whole range of Forex markets and see what moves we see. Obviously, someone who watches Forex markets week in, week out, I can tell you it's a bit of a challenging, it's certainly been a bit of a challenging start to this week. Last week it was all about the yen crosses. The week before, I think it was pretty much all about the US and particularly the Aussie US and that sort of thing. But we've had quite a lot of volatility as of last sort of Saturday, my time, and it's sort of made the markets quite volatile for the start of this week. There's a little bit of opportunity on Monday. There's often opportunity on Monday for me when the market wakes up. I often find this not always the case, but often you have a lot of opportunity on Monday. Tuesday and Wednesday are often a little quieter, and then Thursday, Friday, it springs back into action to sort of close out the week. But anyway, we'll have a look at as much as we can of that. Identifying key trends, patterns, and potential trades that might be setting up, just part of a regular market scan. Live chart analysis of all major currency pairs. And that's pretty much the end of the slideshow. What I'll do now is just give me a second and I'll bring up the One second, where are we? Okay, there we go. So what you should see on your screen now, let me just check that's right, is a copy of the IC Market C Trader platform. And that appears to be what I can tell you're looking at, which is good. Okay, now, okay, so this is what the platform looks like. I'm sure you're all fairly familiar with that. Watch list to the left here with all of the currency markets that I typically look at, which is a lot of them, plus gold and silver there as well. Your charts here, and you can change between sort of the sequence that I use is monthly, weekly, daily, 8, 4, 2, 1, 15, and 5. That's pretty much the only time frames that I look at. On my charts, I have obviously the candles. I have moving averages, 10, 20, 50, and 200. And I have MACD and RSI. That's predominantly what we use here at Trade with Precision to give us, all of the information we need about the markets. And over here, order tickets and other news, information, calendar, things that you can access as well. But predominantly, what we're looking at is the charts. So let's just start with the euro dollar, because this is obviously the most heavily traded currency pair in the world. So what do we see here? So, if I'm just looking at this fresh, okay, let's just say I've never, not been following it week in, week out as I normally do. So this market is obviously very bearish, okay? It is obviously definitely moving to the downside. Anyone could tell you, a seven-year-old could tell you that this market is going down. Over the last however many candles, that is at least a year, we are mainly red candles. Red candles are bearish, blue candles are bullish, as in red going down bears a slow, bulls charge. A charging market is a bullish market, a market going down is a bearish market. A candle that is red obviously finished lower than it started, and a candle that is green obviously finished higher than it started. Just so you're aware of all that. But what do we see here on the euro dollar? So definitely moving down faster than its moving averages. So moving down, certainly faster than the monthly chart. So you wouldn't be taking any trades on the monthly chart because you're too far away from the moving averages. But what's really important here is this level here, 1.000. That's obviously the parity level, what we call the parity level. So therefore, 1 euro is equal to 1 US dollar. Now that's a pretty key level to have broken through. Okay, and I don't know if you go back in time, you can ever see, oh yeah, it has. Okay, fair enough, it has. Way back in 2002 is the last time it was below that level. But you can see here, even back then, how it sort of very much reacted to that level. It sort of hit that level and then it's sliding along that level for quite some months before it took off again the other way. So it is pretty typical for the market to be to hit that level and have a bit of a retracement, but it didn't here. So strong was either strength of the US or weakness of the euro, and I think both, that it pushed it right past that. So we have to appreciate that we are certainly in a bearish market, but we are below the parity level. And the current monthly candle, now admittedly we're 25 days into this month, so only got about a week to go. It's the 25th of October, and this is a green candle. Okay, so that means it's come right down all the way to past 96, and it's tested these lower levels, and it's rejected those lower levels so far, and we are currently sitting higher in the month of October than we started. So that is a slight bullish signal rather, if it does stay green or get more bullish for the period of the rest of this month. that is a signal that we may be looking for a deeper pullback. Last time we had a green candle, it was just a bit of a move to the side. So if we saw that, it would be another move to the side here. And what that does do is allow the moving averages to catch up a little bit. So whether it breaks above parity again this month, or we have to wait for next month, we will see. I think with a week to go, we'll probably have to wait for next month. But point is, the chances of it going lower from here, certainly within a month, or even I'd say next month, are slim. I don't think we'll have another bearish month this month or next month. I think it will probably be slightly more bullish, but I think it will probably struggle to get past the parity level. So we'll have a little bit of choppiness, essentially, while it figures out what it wants to do. You know, it doesn't want to break above parity or doesn't want to continue down. Obviously, economic data will feed into all of that. You know, how does the US economy fare with the Eurozone economy? All of that will have an impact. But as I say, 25 days into the month, and we do have a green bullish candle. So what does that look like on the weekly? Now, on the weekly, here is the best. So here is a much better chart to be trading off if you wanted to trade off, you know, on this particular chart. What we're looking for in terms of trading is, you know, a number of strategies, but one of them is the trend flow strategy. So we're looking for a nice trend in either direction. In this case, obviously, it's a downtrend. We're looking for you know, in the case of a downtrend, as I say, a series of lower lows and lower highs. The sequence of lower lows and lower highs is what we call a downtrend, you know, and trends move in waves. So here you're moving to the side a little bit. Oh no, you're not. You're in a downtrend right up to pretty much here. So we're a little bit messed up here, but then we make a lower low and we break this low to make we make a lower high. We were trending up here. Then we make a lower high, break this low to make a lower low there, and then we start a sequence of a downtrend. So ideally what you're looking at is for the trend to move down in waves and pullback, waves and pullback. That's what it does time and time again, as you can see here. The time to get in is exactly now. Really, it's when it pulls back into these moving averages. So the area between the 10 and the 20 period moving average is really sort of that equilibrium of the trend. That's where you'd expect it to pull back to before running down on another wave. And you can see it's done it multiple times before. It doesn't have to be exactly in the zone. It can be touching the zone or close to the zone. I mean, obviously the closer the better. Even this as well, you know, that back into the zone, wave again, back into the zone, wave again, back into the zone, wave again. So we're in exactly that position now. Bear in mind though that we've actually had a bit of a higher low here. There's a low, push up, there's a higher low. But this could be in the midst of another retracement a little bit further. Bear in mind that there is that parity level there, and price can be attracted to that parity level, so it might have a little bit more to go. Also bear in mind that although this is a red candle, it has a longer tail than it does a wick. Okay, so on a candle you have a tail and a wick. If the tail is longer than the wick, then it is predominantly rejected lower pricing and it's come back to where it was before. So it's not as bullish as you might think. Nevertheless, it is pulling back into the sell zone, and if that does turn out to be, now we're only brand new into that week. So on this particular candle, this is a weekly candle and the week has just started. So we have no idea how that candle is going to finish up. It could finish up really green and go all the way back up to parity, or it could finish up more red than it is. So we have to wait and see. But in the meantime, you can certainly circle that. I use these ellipses as quite a lot to sort of highlight areas that I'm interested in. I'm interested in how that candle finishes. Go down to the daily, and then we can see now it's just a little bit more mixed. You can see this higher low that it's pushed in, and we're now, this is the downtrend, but you put in a higher low, and really it comes down to how does it, when you put in the ellipse, it's interesting how it sort of highlights that area on the charts further down. So I'm interested in this little pullback here. It's had a nice pullback. It's had a run down to a higher low, and it's now just sort of bouncing around a little bit. I want to know how it breaks out of this sort of pattern here. You know, as in, does it push higher or does it push lower? That will sort of inform my decisions on whether I think this is going to continue to the downside or whether I think it actually has a little bit more upward momentum in it. If we go down to the 8 hour, again, you've got a bit of a, well, it's not really a trend because you've got there's your higher low, okay, just there in comparison to the one before. We're in a bit of an uptrend now in that you've got a high, a low, a high, a low, but then we've kind of made a lower low and we've made a more or less equal high. So you're a little bit flat now. So as we go down the charts, these charts are obviously going to look messy. Equal highs all over the place. You can't see a series of higher, you can't see a series of anything here. You know, if that was to make a high, then that was to make a low, then that was to make a lower high, great. If that was to break that low, which it sort of did, wonderful, but then you'd expect it to sort of make a lower high again and then continue down, but it hasn't done that. So effectively it doesn't know where it's going right at this point on the 4 hours and below. So really not worth looking at anything below. Because they're just going to be messy, and any sort of trending is going to be really just within the context of this mess, which is going to be pretty short-lived and volatile conditions, really. So that's the euro dollar, essentially just waiting for, I think, what are we waiting for? I think we're waiting for, where is this daily trend going to go? And I think for the moment, it's just going to bounce below parity for quite some time. Okay. Let's just talk about a few markets that I have found opportunities on so far this week. And again, they've been on the real lower time frames, unfortunately. Nice when it's really nice, and what you're looking for as a trader is effectively when all time frames are painting the same picture. So you're looking for periods where, I mean, ideally, oh, whoa, look at that big gap down there, but this is in a downtrend. Okay, so on your monthly chart, that informs, even if we go back to your euro dollar, like I just mentioned, your monthly chart kind of informs the direction. So really, why would you be going long when this market is definitely going short? Although you know you have a few other factors to consider. What you want to do is effectively wait until all of the different time frames are moving in the same direction, so that you have sort of short, medium, and long-term momentum pushing your trade in the right direction. That's kind of what you're looking for, but you don't always get that, unfortunately. In the case of the New Zealand Swiss, what I can see here on the monthly is currently what we're in the midst of is a downtrend from the point that we made a lower high here, and then we broke that low to make a lower low here. We're in the midst of a downtrend. Then we make a lower high again, 3 lower highs, break the low again, and we're in the middle of a downtrend. Very overextended again. We've had a big gap here on the monthly, a long way from the moving averages. And what we know is the further price gets from its moving averages, the higher the probability of a pullback to the moving averages. So that doesn't necessarily mean trade long. It just means, unfortunately, you have to wait until either the price pulls back or the moving averages catch up. Now, the weekly is essentially giving us the same picture. You've got a nice series of lower lows and lower highs here. You are nicely pulling back into the sell zone here, just here. So at the moment, you would be looking further down the charts, waiting for evidence. Again, this week is very new, as in only a day old, this weekly candle. But nevertheless, if it was to stay like that, you're looking for opportunities to ride the next wave down. Okay, so it's done that how many times before? Once, twice. You'd expect it to do it a third time. What these, now's a good time to run through the indicators, the MACD and the RSI. If I get my crosshair out, what we're doing with these is we're comparing the lows, as in the most recent low, which is there, with the one before it. Now, what we want to see on the indicators is as price makes a lower low in comparison to the one before, we want to see the indicators doing the same thing at the same vertical level. So there compared to there on the MACD, and there compared to there on the RSI. When price and indicators are moving the same way, giving you the same momentum, that is a signal that the trend is intact, as in the trend has some strength to it, which is what we want to see. If you were to see this MACD and RSI moving the other way, as in this low is actually higher than this low, it would be an indication that the trend is weakening, as in that push down from there to there is not as strong as the push down, say, from there to there. And if it's not as strong, then chances are this one, the following one, won't have the momentum of the one before it. So that's sort of how we use these two indicators. So what you want to see is convergence across price and indicators. So indicators telling you the same, painting the same picture as the price. But what we're seeing here on the weekly is a perfect push down and pull back into the moving averages. So as I look down the time frames, and again, refresh yourself on what the monthly looked like, we are incredibly overextended. That's something to really be concerned about. That's a negative for the trade, because as I say, when has it ever been this far from its 10-period moving average? We've had some really big shocking shocks in the market recently, and a lot of currency pairs are further away from the moving averages than they have been since I honestly do not remember when. You can see, you know, since here, well, that was back in 2015. Was it that far away? And when it got that far away, it shot back. So being that far away is a concern. 2009, so it doesn't do that very often, and when it does, it usually pulls back rather quickly. Back to the weekly though, this looks really good for a move to the downside. So we've got a bit of a conflicting story on that, but at the end of the day though, just because it's overextended doesn't mean it's ready to pull back now. It's definitely be aware of it, but it's not quite ready now. So lovely bearish candle in the sell zone. Daily has pulled back too far. Okay, so what we need to, so every candle, every chart further down is going to look like a bit of an uptrend potentially. We need to assess the strength of this pullback and figure out where that pullback is running out of steam and about to move over. Remember again that weekly candle is only very new, so we're going to get more information as we go down the charts and we see. Here's the pullback here. Latest candle is red. That's great. Very strong to the upside, but we've had a real push down in the just recently, last evening, which is interesting. Now the opportunities have been within the pullback that I had yesterday. But since then, we've had another push to the downside, which sort of is in line with the monthly view, a big push to the downside. But at the same time, we've now put in a little green candle in the what we'd call the buy zone. So when the 10 is above the 20 and above the 50, then that area is called the buy zone. So you'd normally expect that to be a buying opportunity, but these big candles are a bit of a concern, because big candles suggest volatility, suggest the market is not flowing naturally. There are other forces at play. And here you can see on the 4 hour you've made a lower low. Okay, so this uptrend is probably now finished because you've made a lower low. Okay, so if you were to consider that a buying opportunity, you really need to have the same picture on at least the chart above, which you don't, or the chart below, which you don't. So you need to have, in any sort of opportunity to either buy or sell, you need to really have two time frames. Well, the more the better, to be honest, but at least 2 time frames in your saying the same thing. So now here you can see on the 2 hour, you can see that higher high there, but the lower low there. And funnily enough, when it made that high in comparison to the one before, you can see divergence in the indicators. Slight divergence in the indicators. See how that high is not keeping up with that high? I mean, it's close, admittedly. It's not hugely divergent, but it's slightly divergent. This one here, we're starting to diverge on those highs. From this point, starting to diverge on those highs. So that's a signal that that uptrend may be running out of steam. And sure enough, if you were seeking to get in here, there's a bullish candle right there. If you were seeking to ride the next wave up, that divergence may have kept you out of that, and it didn't actually break the top of that candle anyway. Now, where were the opportunities? Basically on the pullback. No. This was last, hold on, where are we? No, of course, we're trading the same direction. So let me just, I traded a few things yesterday, so let me refresh my memory. Definitely to the downside, okay? Sentiment for the monthly, although it's overextended, definitely to the downside. Yes, it's overextended, but there's no reason to think we should trade that to the long side at this point, because it's definitely to the downside. This is definitely, definitely seeing a bearish momentum here. Everything is to the downside, and then when you're looking at your 15-minute, you see this pullback suddenly change to a downtrend, as in, okay, so it's a very long tail, unfortunately, but here's a high, here's a high. We're uptrending here. We start making lower lows, and then we break the low of this candle here. Okay, the moment we do that, we're in a downtrend on the 15. So there's a couple of opportunities to get in here. Back into the sell zone. When you're in a sort of a wave, you see the red candles, and then you see the green ones start, and then you see the green ones finish and the red ones start again. When you get this nice sort of red candle in the sell zone, in this case, a break at the low of the low with a stop above the high, and that's where you want to get in. So there's an opportunity there. There's potentially even another one there, right there, and that pulled back too far. And of course, that was the middle of the night for me, so wasn't trading at that point. So that's how you sort of find opportunities on various charts. But the future of this chart, well, we just don't know. I mean, it's still to the downside on the weekly, so there's no reason to be bullish at this point. But we're overextended, so we really should be expecting anything. Okay. Let's have a look at the pound Aussie, because that's where little bit more action was, okay, this was going to the upside yesterday. Okay. Monthly perspective, pretty boring. You know, we don't really have much here at all. There's, you know, you couldn't sort of find any trend in there at all. Okay, the monthly is not really giving you anything, to be honest. What's the weekly saying? Bit of a downtrend here, but we've had this big candle like a lot of markets had recently, and we're pulling to the upside on the weekly. Daily started to trend upwards. Okay, that's interesting. 8 hour still in an upward trend, but starting to sort of struggle at these levels here. Nevertheless, there's a low pushing back up again. Bit messy on all of these charts, to be honest with you, but where you see it come into its own is really down at the lower time frames at the 15-minute, where not now, obviously, because what are we looking at now? We're all over the place. But what we saw last night, or yesterday rather, was this sort of thing. Okay, so when the week started, this is the start of the week, this gap here. Yep, so this here is the 22nd, this here is the 24th. So, you know, there's a massive, obviously, gap in between, you know, from one week to the next. But when Monday started, we just started to trend up nicely from about, you know, this is the kind of sideways, but as soon as you have that, the 10 crossing above the 20, and then the 20 crossing above the 50, and then they start to just make this nice fanning pattern, all of the 4, or at least the 3 moving averages. I mean, the 200 period moving average, which is here, the green one, is a slower moving average. That's a bigger ship to turn around. You don't necessarily have to wait for that to come into line as well. I mean, it came into line here. You know, the 50 crossed the 200 here. If you wait for that, you're going to miss a lot of opportunities prior to that happening. So you don't necessarily have to wait for the 200, but certainly the other two, 10, 20, and 50, you want them to come. I mean, first of all, as I say, you need to watch for the 10 crossing the 20, then you need to watch for the 20 crossing the 50, and then you need to just wait and identify these nice uptrends starting. And as I say, when it pulls back close to these averages and gives you a nice bullish candle, as it did here, that is an opportunity to ride, as we say, ride a wave. I mean, we are trend following traders here at Trader with Precision, and predominantly what we're looking for is trends. We're looking for continuation of trends, which is, you know, here, pull back, there is a beautiful bullish candle in the midst of an uptrend. You got convergence on your indicators up to that point. As in, okay, so if you're looking at that going, well, hold on, the RSI is lower than it is there. Remember, again, we're comparing the highs to the previous highs. So this is the most recent high. At this point, this is the most recent high. This here is a pullback. So you would expect the RSI to do this. You'd expect it to pull back as the price pulls back. What you're looking for is strength of the highs, because if that high is stronger than that high, which it is on both indicators, you'd expect the next one to at least be, you know, worth taking. Now, sure enough, it's not, but you wouldn't have known that at this point, and it's still enough to give you another push. When you do see this divergence, as in this high compared to that high, you can clearly see divergence on the RSI. Can't see it on the MACD yet, but you can clearly see it on the RSI. That's a signal that this pull back, which it didn't quite make in my opinion, could have been a little closer, was clearly not as strong as the ones before, and that has resulted in you know, a falling off of that, an ending of that trend. As soon as you break, you know, you make a high slightly, but when you break that low at this point, your uptrend is over. So not looking to uptrend that anymore. You know, no more opportunity on that chart at the point that we lose that uptrend. But while we're in that trend, there were multiple opportunities to get into that on the 15-minute. Now, where is the future of, we've looked at 3 markets now, and where is the future of a lot of things? I mean, it's very, very volatile. You can't predict where that's going in the future. Your moves at the moment are coming on lower time frames. We're looking to the lower time frames to find effectively anything. It's very hard to find direction on a lot of higher time frames. Even the yen crosses that were looking so good last week have all just gone haywire this week. Was the euro? Yeah, the euro was a good one. 2 weeks ago we had really good, well, actually we've had not just that. A week ago we've had good opportunities on all of the yen crosses, but here we're in an uptrend. Okay, we're looking to trade long. Lots of opportunities up here, not necessarily on the weekly, but definitely the sentiment is to the upside. All the way up here, you can go down the charts and find opportunities, but just in the last 2 days, we've had massive candles, massive corrections, which look even more volatile as we go down the charts. I mean, look at that. That was 1 o'clock on the 22nd, which was Saturday my time. So at the end of the week, basically. So from the end of the week to the start of the new week, we've had a tremendous amount of volatility on the yen crosses, on all of them, by the way. Prior to that, we were looking really nice, trending to the upside. All of this trending was really nice. I'm sure you can see opportunities abounding in there. But since this happened, it's just, well, it's effectively it leveled off though. Leveled off and ran out of steam on the upside, and then you've just got this massive push down and just all over the place. So whenever you see big candles like that, it just means that some force is at play, that there's no flow in this market. So very, very difficult to trade. Actually, what I have been completely neglecting is any questions. Let me just have a look at that. Sorry about that. Previously, the epicenter of your analysis centered on the DXY. Does it still have a role? Nicholas, let me know what the DXY is. Not quite sure what the DXY is. Let's have a look at the, while you're answering that question, pound Kiwi also had some opportunities on the 15-minute. Obviously nothing today, but as I said before, there's often opportunities on a Monday. Okay, very much the same as the pound Aussie. This is the break from week to week, from 1 week to the next. It did a very similar thing. We moved sideways to start with, and by the way, I don't normally trade until whenever the first 4-hour candle breaks in the new week, which is or the second one actually, to be honest, which is 1 o'clock my time. So you're going to have to see what that is your time. But my first trading is at the break of the second weekly candle, which is, yeah, as I say, 1 o'clock Monday. Although, so you're not getting anything from the monthly. You're getting just choppiness. The weekly, again, I mean, you can't get anything out of that. Again, opportunities are down on the lower time frames. Even the daily, this is sideways, big push up, but then it's gone nowhere since then. You've had a higher high, but you've then made an equal low. So you're going nowhere on the daily, going nowhere on anything apart from, in this case, the 50. So, you see on the 2-hour, you can sort of see we're kind of in a downtrend here, very volatile. Looked like we were going to pull down again, but we didn't. We broke the top of the high and we're on the, we're in some sort of uptrend on the 2 hours. So that's an opportunity to look down and see if you can make anything out of this move here. So as you're looking at the new day kicks in here. You didn't break down, but you did break up. So here's that sort of choppiness again, and here's the sideways action of we don't think we're doing anything. But as soon as you sort of break up and make a new high, that's an ever so slightly new high, but that's probably a new high, a more obvious new high, and you've made a higher low. So there's a higher low, and your moving averages are nicely in line again. So opportunities on this one as well. There's one, very similar to the pound Aussie, but since then nothing. So kind of slim pickings this week, I would have to say. But to be honest, the Aussie Kiwi giving you a similar sort of so let's do a full top-down approach for this one. Now, monthly candle strong to the upside, as in either a strong Aussie or a weak Kiwi, one of the two. However, what do we see when we look at this candle here? We see a series of green candles, and then we see a red one, but hold on, this is not right. This is bad data, and that often happens at the start of a week, to be honest, on the monthly chart. If this was red, it's because price, okay, so price, the candle has to start at the previous candle's close. So the previous candle, if it's green, it obviously means it closed at the top of that body. It means it started at the bottom of the body, it closed at the top of the body. It's been up to here and down to here in its respective month, but that's where it closed. The next candle needs to open at that level. Now, if it's closed there, sure enough, it's going to be green, but everything above the body of the candle before should be a very long wick on that candle. It shouldn't be part of the body of that candle. So you often get a little bit of bad data at the start of the month. But as you go to the weekly, you'll see exactly what's happened there. You've had a big push up to that level and a big push down, which is exactly what I said. But as I say, that should be a wick, not a full body of that candle. So going down the charts, you can see exactly what happened. Big push up, big push down beyond the sell zone. So the opportunity to take another ride up is lost, even though you might have expected one because you've still got convergence on the indicators here. Nevertheless, it didn't happen. So you've broken the previous low and you've made a lower high, and you've broken the previous low, and you're starting to downtrend from this point on. So here's once you've established that you're now in a downtrend, there's opportunities to be made, and there has been for a few days here. Um, 2 hour, but then we start, as you can see here, as we're on that downtrend, we start to diverge from low to low. See how the indicators are starting to diverge, and then you hit this big, upward candle just recently. So that's, pretty messy on these charts. But as you go down the time frames, you can see what can you see? You can certainly see opportunities yesterday where you were moving to the downside but pulled back too far and started to uptrend. Now, this here is even too fast for the 15 because it's too far from the moving averages on the 15. So in that case, you can go down to the 5. Now you have to be trading pretty quickly to trade the 5 hour candle. but here you see opportunities on the 5. So as the week starts, you know, you've got to be pretty quick to sort of get into these opportunities here. Now, if there are any other market, I'll just take questions, sorry. DXY72, strength of the US dollar against, the US, yeah. Now, forgive me, this is a practice account and not everything is going to be available. But yeah, absolutely trading the US dollar against other currencies, the basket of US dollar currencies. Let's just see what is available here. It may not be available, but yeah, effectively the US dollar index. Yes, I do trade that. But forgive me, it's not on this particular platform that we're looking at the moment. Can you look at gold? Yes, of course I can. Yes, of course I can. Says Terry. So let's, one second. Let's do a top-down approach on gold. Now, normally people flock to gold when there is a lot of volatility in the world, but recently everyone's been flocking to the US dollar. So, you know, and you can see gold has had a stellar run just, you know, here, which is wonderful. But then it makes a low here, it makes a higher low, and it makes a lower low, and it starts to sort of downtrend, and then it moves to the side, starts to pick up a little bit again, and then tanks again. So definitely at the moment you'd have to say, and as we are now below these previous lows, you'd have to say the outlook on gold is a bit bearish. Overextended, yes, but bearish. Yeah, so that's all you're getting from the monthly, bearish momentum. Weekly, nice trending to the downside here. Now, again, 10 crossing the 20, you know, the 50 is not there, but still 10 crossing the 20 is enough of an opportunity with a previous, no, you might have probably, well, that's an equal low, isn't it? But nevertheless, you've got an equal low, you've got a lower high, you got the 10 crossing the 20, that might have been an opportunity to go down to lower time frames and see if there was an opportunity on those candles. Let's just have a look again. Probably not, but at any rate, we are certainly looking at downward momentum. Now we have made an equal low there. So as push down, pull back, this push down was slightly weaker than the one before it. That's possibly going to look a bit sideways as we go down the charts. Now we are a little bit of bad data again, because as I say, that body of that candle should not be above the previous candle's close, but it is. Sure enough, there's the push down, there's another push down, a little bit higher. What are we doing now? We've pushed up, we're pulling down again. We are in the sell zone, so if anything, we're still bullish, bearish rather, but I would actually, going back to the weekly, I would probably wait for, what would I wait for? Monthly's giving you nothing. The weekly, I think you need as we've had an equal low, I think you definitely need to confirm another lower high. There's a lower high, there's a lower high. You definitely need to confirm another one before I think you've got confirmation of a downtrend continuing. Definitely think you need another one, because I think because what we're seeing here is just, you know, low, higher low. That's kind of messed it up a little bit, messed up the flow a little bit. So really, if you just take this latest rundown, you know, okay, what does that look like on the 8 hour? So just focus on this one. we've still pulled back higher than the sell zone. So, you know, opportunities to ride this down are, I think, have ended. So we're kind of mixed. Now we're sort of stuck in this region where we're sort of trying to figure out where we'd go next. Does that mean a move to the upside? I don't think we're there yet. Does that mean we can push to the upside? You have made a higher high here. If that does push up, then obviously that will turn into a higher low. 10 is above the 20, 20 is above the 50. Looks okay. What does the 1 hour look like? That's pulled back too far. The strength of this pullback on the 15 is weakening, which is a good, so that pullback is weakening there, which is a good sign for it turning around again. But we do have really high wicks and long tails on these candles. So I think it is still a little, it's very unsure of itself. I wouldn't be there's just too much of a mixture between the time zones. You know, if you flick through the time frames, you go one up, one down, one up, one down, one up, one down, one up, one down, then you know, they're not really the best trading opportunities. You want to really be trading in these types of opportunities. You know, when you see that on the monthly, just wait for everything else to fall in line. You know, when you see that on the monthly, or, you know, even if you're not getting the right candle on the monthly, but it's definitely a pullback on the monthly, wait for everything to fall wait for everything else to fall in line. But here, just a bit mixed. If you were to go, if you were to go long on the 2 hour, which is the only one that looks good, you're really just basing that on the latest higher high on the 2 hour and a new low which hasn't really even fully formed yet. So I think that's too yeah, and you're definitely arguably still in a downtrend on the daily. So I think it's a bit mixed. It's a hard one to trade. It's a hard one to trade. Yes, the only place to trade is the 2 hours. But as I say, it's volatile, it's picky. It's not what we would call optimal chart structure. Optimal chart structure is just that nice, well, what we saw on the monthly here, just that nice flowing, easily predictable, or as easily predictable as you can get. Show it on here, but you know, just that nice, easily predictable series of highs and lows. Even this low on the weekly is nicer looking. You know, if this was up here, it would probably be a lot better, because you're at the previous low. There's the previous low. You've pulled back to that same zone within the context of a pullback, and now you're looking to run down again. This here kind of looks like it's done that, but it's not done it very well, and it's pulling back again. So I just sort of think it needs to figure out where it's going. Due to lagging of MAs, which EMAs, due to lagging of moving averages, question from Diana, due to lagging of moving averages, which EMAs will be your ideal trigger entry? First of all, I use simple moving averages, not exponential moving averages, but really I use moving averages really just to give me an idea of the short, medium, and long-term momentum, and I'm really only looking at them to provide this either sell or buy zone. The period between the 10 and the 20 is where I want to see price moving along that 10-period moving average and pulling back into that sell zone or buy zone if it's going the other way. That's essentially what I'm using them for. Yeah. Which time frame, another one from Diana, which time frames will you use for entry? I will use any time frame for entry, providing it is giving me that nice pattern. So for example, you know, all of the trades that I've had this week have been on the 15. But that doesn't always happen. Let me go back to that again. Wherever I'm seeing that pullback into the sell zone, that pullback into this, whether it's on the 15. Now, admittedly, just be aware that if you want to make sure that the chart above is giving you the same picture as well. Let me just refresh my memory. That is the day. That is the 15. That is the 5. I myself what I was looking at the time. I mean, yeah. So just say there. Say 5 o'clock yesterday for me. Whatever time frame you're seeing that setup happen is where I'll go in. I actually prefer it to be on the time frames a lot higher. But let me just flick through a few charts and just see. Let you see what can I tell you? You just flick through a few. Actually, the weekly charts were giving you a lot more idea of future momentum. Now, again, we've talked about the euro dollar already, but again, where you see, and admittedly this candle hasn't formed yet, but whenever you see a red candle in the sell zone like that on the weekly, it is a really, it is time to go flick down the time frames and find out where this pullback, which is obviously going to look like an uptrend on the charts below, is going to run out of steam and turn around. Where it runs out of steam, you'll see this divergence in the indicators. Where it turns around is where it stops making higher highs and higher lows and starts making lower lows and lower highs. Lower lows, did I say that right? Yes, lower lows and lower highs. You want to see that pattern of one trend changing to another, and then you want to see moving averages come into line on whatever chart it happens to be doing it on. It could be the 2 hour, the 4 hour, whatever it happens to be. You want to see this sort of action mirroring itself on the charts below. So in that respect, you can be trading on any, as I say, this is the sequence that I use, but where I find my trades could be on any of them, really. That's kind of why I like to, as I said before, every time a daily candle starts, I want to be able to assess the one. Well, sorry, not starts. Every time a daily candle finishes, I want to be able to fully assess it. Every time an 8 hour candle finishes, I want to be able to fully assess it. 4 hour, 2 hour. Don't necessarily have to be assessing every 1 hour candle, but the daily candle starts in 1 minute. The next daily candle starts in 1 minute. Okay, my time, 7:59. So when that prints, I want to see, what this one's done, because I'm looking for exactly those types of setups where, either you've got a breakout strategy or you've got a trend flow strategy where it pulls back into the sell zone or buy zone and gets ready for another run. Okay, what I'm going to do now, as we are kind of at time, I'm going to just finish off the slideshow and I can see if you have any more questions. Live market analysis is done. If you want to contact IC Markets, this is the way to do it. Thank you very much for attending. I do hope you got a lot out of that. So it was just a typical market scan. That's pretty much how I do it. I know we didn't get through everything, but it's a little hard to get through everything as I'm talking. But essentially, How do I get through everything? If I'm doing a daily scan, I want to be on the daily, and I want to just go down my watch list and just see if anything looks like a trade. And what I'm looking for, by the way, I'm looking for, well, kind of that, or kind of that, although that didn't quite work. But I'm looking for nice pullbacks into, I'm looking for nice trending. I'm looking for moving averages fanning nicely. I'm looking for just setups on whatever chart that I'm looking for. And I'm just flicking through. I know exactly what I'm looking for. So if it's not there, I'm not interested. I can see that everything is sort of topping out or giving you this massive correction, which all the yens have done. So I'm saying not a whole lot to talk about on the daily perspective at this particular moment in time. Nothing looks particularly attractive. So that's a daily scan. If I want to look at the 8 hours, I'm doing that as well. I'm going through all the 8 hours as well, going, where is a setup? I cannot see anything. 4 hours I want to go through, and as I say, it can draw your attention if you see, as I say, something like this on the as I'm going through the, I mean, what took my eye on the Kiwi Swiss, for example, I would have gone through everything going, no, not particularly interesting. That's turning into an uptrend. As you're looking at the 8 hour, you can see, oh, moving averages crossing, that looks all right. That kind of looks interesting. As I go down the charts, yep, that kind of looks interesting too. Where are the opportunities there? And of course, this was yesterday, so no, they were going down. So you honestly forget which chart is what as you're going through all the charts. But you know, when you're looking for that on any particular market, you're looking for nice trending on any particular market. When you get nice trending, it's only a matter of time before you can find you can time the right entry. All right, yes, this will be recorded, Terry. Yeah, so I hope you enjoyed that. It's a little hard to, it's very hard to verbalize everything that happens in a typical scan, but I hope I've done that as well as I can. Yeah, all right, everyone. Thank you for that. I hope you enjoyed it or got a lot out of it, and do look for further opportunities to learn, and I wish you all the best. All right, thanks everyone.